Hey traders, welcome back. Today we're tackling an important question. How can retirees or those needing extra income cover their monthly expenses through dividends? Enter YieldMax ETFs like YMAX and ULTY. These innovative funds promise high monthly distributions that could help cover essentials like groceries, utilities, and rent. But before you jump in, let's look at the numbers and let's look at the risk. YieldMax ETFs specialize in generating income using covered call strategies. Here's how they work. These funds are designed to provide consistent monthly payouts, making them attractive for retirees or anyone looking for extra income. So let's look at the monthly or the actual payouts. So YMAX, this ETF pays weekly. So every week, this ETF pays you a dividend. And the last two dividends were 23 cents per share. And the last one's kind of low. I think this is because of Thanksgiving short week. So that was 12 cents. But before that, it was like 30 cents, 24 cents, 15 cents, 11 cents. So it's consistently paying you every week. Also looking at ULTY. Oops. Also looking at ULTY. This ETF is paying you monthly, and this one's paying around 82 cents, 83 cents, and 70 cents for the last one. Again, I think it was due to the short Thanksgiving week. But yeah, these ETFs are paying very well. It's only $9 for that much return, right? So the stock price is only $9.35. Which is pretty good. It's pretty good. Yeah, let's see what ULTY holds. So top 10 holdings for ULTY: AMD, Alibaba, Kava, calls and puts, Celsius. And I think they have a little bit more, but these are, the top 10 holdings right now. Also for YMAX, top 10 holdings. So top 10 holdings for YMAX. So we have Tesla options, Snow, AI, PLTR, SMCI options, Meta, Google, TSM, Microsoft. So these are the underlining of this ETF, which the NAV's pretty steady on this one. It's 1826, so it's pretty steady, and getting paid 23 cents weekly is amazing. So yeah, let's look at the risk involved though. So here I'm on this website called Sheets, and it's just a dividend calculator. But we put in ULTY. We bought 1,000 shares at 98.61% annual dividend yield at $9.11 share price. We put 0 monthly contribution because we just want the raw numbers. And payment frequency is monthly, yes. Dividend reinvestment, no. Calculate. So the monthly dividend income is like $748 on 1,000 shares of ULTY. So that's like what, $9,100. You're getting paid $748 a month just by holding this ETF. Total dividend income is around $9,000 for the year. So total investment is $9,000. So basically, after 12 months, you'll break even. And the trade would be free. And then so we could do 5 years now, right? So monthly dividend income's the same, but you get paid, $45,000 in 5 years. But what if we want to reinvest the dividend income or add a monthly contribution? Actually, let's do this one. So let's say I'm putting $200 a month. $200 a month. So now we pop off $75,000 in 5 years. Say we want to reinvest it. Screw it. We want to reinvest the dividend income. So let's do that. Crazy numbers. $800,000 in 5 years if you reinvest this $748 every year. But yeah, let's just do 3 years and see. Yeah, $138,000. So yeah, this is crazy. So let's just say you have 50 grand you have 50 grand, so you want to buy, I don't know, you could buy how many shares? Let's go like 4,500, right? 4,500 shares. You're like, all right, I'm gonna put $100 a year or a month, sorry. Reinvest income, no. Let's just see how much money you can make with 4,500 shares. So here it is, $3,300 in income a month. That's crazy. So that's a monthly income. You can cover rent, groceries, utilities with this. But let's look at something else. Let's look at Tesla, or TSLY, which tracks Tesla. So this dividend ETF tracks Tesla going up or down. So let's look at that. Let's buy 1,000 shares at $16.65, $100 monthly contribution, so $1,200 a year. And we'll see what happens. We'll see what happens, because I know there's a lot of Tesla fans out there. So let's see what happens. So here it is. You get paid $871 a month with 1,000 shares of Tesla. Now, is that as good as ULTY? Not really, because ULTY is a lot cheaper than this. But also, Tesla's NAV actually goes higher though. So ULTY is more stable, but Tesla's NAV goes higher. So yeah, this could be at 16 now, but it could be at like $22, next year if Tesla keeps going up. Let's look at another one. This is a lot of people's favorite, MSTY, which tracks MSTR. A lot of people made a lot of money on this one, this ETF this year. Let's see, it's at $33 share price. We're doing 1,000 shares today, $100 a month in 3 years. Let's see, let's calculate how much. So there it is, $2,000 in monthly dividend income. So let's say we still have that $50,000 in our pocket, so, and we're trying to spend it. So let's do 1,600 shares and see what's up. 16. So yeah, you're getting $3,200 a month. That covers a lot of rent, utilities. That's really good. So yeah, I would check this out. I would check this calculator out. Y sheets, it's pretty cool. And yeah, let's look at the drawbacks and the drawdowns, because that's really important. The NAV's really important. Let's look at that. So why do people say these are risky? These are risky funds. Well, if you bought back in March and you bought at $46 on MSTY, which tracks MSTR, if you bought at $46 and all it did was go down to 27, then it went down to 23, then it went down to 18, you wouldn't feel so good. You would not feel so good. You would not feel so good about that. It's high risk. These are big moves. 45 to 18. That's like 60% of your NAV there. But on the other hand, we're still getting paid dividends each month here. We're still getting paid dividends each month here, and the NAV can actually go higher as well. So it's high risk, high reward. Obviously this was the start of the Bitcoin bull run here on MSTY, but let's look at ULTY. So ULTY is another one that not a lot of YMAX traders like, because look at it. People that bought at 20, it's now at 9. So you're still getting paid dividends each month, but now the NAV's cut in half. It's cut in half and people aren't happy. But if you buy down here and it goes all the way back up to 20, you're going to be a happy camper. So high risk, high reward. Let's look at the last one, which is YMAX. YMAX pays weekly, so every Friday, Thursday or Friday. So yeah, let's look at this. So YMAX has been stable. It's been hovering 20, 21. Went down to 20, back to 20, 20, went down to 15, dipped by. But it's been really stable. So people love this YieldMax ETF because it pays weekly And also the NAV is stable. Today we had a huge red day. I don't know what Powell said, but he tried to kill the market. But yeah, people like this one because it pays weekly and the NAV is stable. So less risky. So should you invest in YieldMax ETFs? These funds might be a good fit if you're retiring or retired and need monthly income. If you have a high risk tolerance and understand the potential downsides, and if you're comfortable with volatility. But if you're looking for low risk, stable income streams, these ETFs might be for you. Bigger the risk, bigger the reward. Lower the risk, lower reward. So in conclusion, these ETFs provide insane returns, which can help you cover your bills like rent and utilities, but they have high risk. So if you're considering these funds, please make sure they align with your financial goals and consult with your financial advisor. Thank you so much for watching. Do you already have YieldMax ETFs in your portfolio? Please let me know down in the comments. And please, please, please subscribe. I need 1,000 followers. I appreciate it.